Allow me to invite the second presenter, Ms. Rina Hicks. She will be presenting on essentials of capital market institutes and their roles. Ms. Rina is a director for a company called Faida Investment Bank in Nairobi. I know Faida has a meaning in Amharic, but I don't know what is meaning in Kenya. She will tell us. So allow me to invite Ms. Rina. You have 15 minutes.
Good afternoon, everyone. Can I use this mic? Is it okay?
Yeah.
Good afternoon, everyone. It's so good to see you here. Mr. Gemechu, thank you. And iCapital, the NSC, thank you for having us and for inviting us. Actually, if you will allow me, before I get into my presentation, I want to ask every Kenyan who is present to please stand. Everyone who has flown in from Nairobi, maybe even Uganda, if you're here, please stand. I just want to say that we are your brothers and your sisters. We are here. Thank you. These gentlemen and women who are here to hold your hand. We have made many mistakes through the years. We have learned a lot as we have built our capital markets. And so we are here to help one another so that East Africa can grow. Thank you so much. You may have your seats. So Faida, Faida means profit. What does it mean in Amharic? Faida means profit in Swahili. Profit, like business profit, to profit from something. What does it mean? Impact. Okay, so still a good thing. Yes, and Faida has been in the market for 29 years. We were licensed in 1995 by the Capital Markets Authority. We are a stockbroker, what we would call a broker-dealer. We also have an investment banking license in Kenya, and we are also in Rwanda. We have a stock brokerage license in Rwanda as well. But East Africa is small, and so we trade even in Tanzania, we trade in Uganda. We have what we call memorandums of association, of understanding, where if a client in Nairobi wants to trade in Uganda, we have brokers that we collaborate with. So collaboration in East Africa is big, and Ethiopia is part of that larger community. And so we are excited to be here. So I'm going to begin on my presentation today. And I'll be talking about, I'll be talking about the capital markets institutions. What are they? What are their roles? What are some of the lessons we've learned in the process? And what are some of the things that we can learn from it as we develop the capital markets here? So the first institution, these are the institutions. We have regulators, we have Securities Exchange, we have educational institutions, we have central banks, we have securities, registrars. Those are people who keep a record of who are the shareholders. We have security depositories. We had Marion come up and tell us about the security depository and its importance. And then, of course, we have investment banks and stock brokerages or brokerage firms. So I want to talk quickly through each of them and some of the things that we are continuing to learn. The first one is educational institutions, and I put this one here specifically because we are in a frontier market. We have to work hand in hand with educational institutions and certifying bodies to help educate the market and educate professionals. So those are some of them. We've got this Chartered Financial Analyst Organization. It's an American institution. We have CFPs. Those are Chartered Financial Planners. CC is Chartered Institute for Securities and Investments. These are just examples of institutions that have really gone global to professionalize this profession. So knowledge dissemination is their role. It's important for them to have knowledge spread out, people to understand what it is that is involved in developing assets, financial assets, but also financial literacy, professional development, getting certified as a CFA or a CFP, and so on. Research. And research is so key for our market, so that then regulators form regulations based on research, not just because it's done in another country, therefore we do now. Regulation and policy should be based on research that is done. Educational institutions also help create networking opportunities between industry players, students, and experts in the industry. Very, very important, so that there's transfer of information and so on. But there's a challenge, and the challenges that we face are many, but I just want to summarize to these two. The quality of professionals who are customer-facing has been low, but that has changed with now a requirement by our regulator to ensure that everybody who's customer-facing must get to a certain level of CC certification. Another challenge we faced as frontier markets, and this applies to Ghana, Nigeria, Egypt, South Africa, Kenya, it just applies to all of us, is that we've had a situation where we have opened our markets, foreign investors have come, and we've enjoyed that. But then when interest rates went up in the US, or whenever there's a crisis or some political uncertainty, we have capital flight. And that then affects our markets. And so we have to find solutions for that. And the lesson then we've learned is to create and empower a critical mass of professional locals and also market participants, so that you have institutions who understand how to invest. You have retail investors who are also investing, and we're not relying heavily on foreign investors. So educational institutions are very important. The second group I want to talk about are regulators. Very, very important group of institutions. So like the Ethiopia capital markets. They protect investor interests. They promote fair and orderly trading. They ensure that the market is a market of integrity. You don't have front running, you don't have some people taking advantage of others and so on. A very important one that I consider to be very key is promoting market development and market deepening. And the regulators play a key role in that. It's not just policing the industry, but also ensuring that the market is growing, because every economy grows more when there's access to capital, and resources are driven to those areas of the economy that are most productive. And then, of course, even regulators participate in investor education. So, for example, in Kenya, the regulator does roadshows. So they will enter, they'll travel to the rural areas, they will hold meetings, meet with villagers, meet with chiefs, tell them about the capital markets, the opportunities, because without people understanding, then we don't have a capital markets. The challenge they've faced is access to capital continues to be challenging. And that's not just the regulator, but it's all of us. Even with capital markets, you find, a company wants to raise capital, but then they don't have the requirements because the regulations are very stiff, and so they can't raise the capital. But they have a part to play. And the lesson we've learned, even from our own regulator, is the fact that regulators can actually collaborate with market players. And I want to give you an example of a company that did just that, and they're called Pezesha. But before I go there, I want to talk a little bit about fintech. Fintech has grown significantly in our country. We have a lot of technology experts in our country, but it posed a very big challenge for our regulators due to risks of identity theft, risks of fraud, risks of all kinds of risks. Now, in 2019, the Capital Markets Authority of Kenya launched a regulatory sandbox. We learned about sandboxes this morning, so I'll not dwell on that. But it has really opened up opportunities for fintechs to raise capital. And the sandbox has provided evidence for the regulator that, this idea that has come up that we think is so dangerous can actually work. And that sandbox provides a safe space for these fintechs to work. And so the example I'm going to share is Pezesha. Pezesha is a company that started off just doing credit scoring and lending to individuals. And as somebody mentioned earlier today, that when retailers borrow, they're borrowing for consumption. Actually, it is a common thing. But Pezesha then decided that they were only going to lend to MSMEs, but they didn't know how they were going to do that because they don't have access to capital. It was limited. And so they created a crowdfunding model where they would get money from individuals such as yourselves, like me, and institutions who are willing to take a bit of risk to finance small and medium enterprises. And then they also found ways to credit score these MSMEs so that they can see, are they going to pay back the money? And they developed a system, went into the capital markets regulatory sandbox, and successfully came out. And so now we have a company that raises money from the public and is lending. They're also licensed by the Central Bank of Kenya as a digital credit provider, and they're lending money. And more MSMEs are now attaining affordable loans in Kenya because of this little company that has significantly grown and is helping the FMCG or the FMCG sector through inventory credit. So a company wants inventory, they don't have enough money, they will get it digitally through Pezesha. And the source of capital is crowdfunding. This is an innovation that has come because the regulator was willing to listen and is collaborating to ensure that the capital markets actually works. Now, of course, we have another institution, which is the Securities Exchange. They facilitate liquidity by matching buyers and sellers. They ensure fair and transparent trading. And of course, education and literacy is also important for them. As I said, we're in a frontier country, so it's important. Now, the lesson here we've learned is that maintaining robust infrastructure and embracing technology is very important because it will attract investors, and not just local investors, but regional and international investors. And the best practice there is to ensure that we are monitoring and upgrading of systems so that they are faster, can do more, and be able to ensure that these execution speeds are high and transparent. And then we have central banks. And central banks here, they are very important because they ensure that monetary policy is formulated, implemented, and it influences interest rates and liquidity conditions. Okay, they manage the country's foreign exchange reserves, they manage the government domestic debt, which is all very important. But there's a lesson to be learned, and this has been learned globally, not just in East Africa. But there has to be a balance between maintaining price stability and supporting economic growth while monitoring systemic risks, as we have seen. And the collapse of this bank last year, I think it was in March 2023, was a key indicator. I think the US started to raise interest rates very fast. They took customer deposits that were short-term and put in long-term securities. And then when people found out, they started to go back and withdraw their money. And it became an issue. There was a run on the bank, and it ended up being, well, really collapsing, but it was bought out by another bank. And so the best practice in this situation is to ensure that central banks are constantly communicating what their monetary policy is. In Kenya, what happens is the central bank actually has a live viewing on YouTube, and the entire country can listen to the results of this monetary committee's decisions. And we all know that, you know, the central bank rate is going to go up by this, and this is what their outlook is. And that transparency disclosure is really helpful for the market to be able to be predictable and stable. And then we have share registries. I'll not spend too much time here because we have already gone through this. The best practice here is to use blockchain technology. And I will share a quick example. The company I've got there called Alpha Block is a company that actually today has been announced that they've been allowed to enter the capital market sandbox. We are working with them as Faida Investment Bank. And what they're doing is they found a system that enables our people to buy a fraction of a real estate property. So for example, if this building is on sale, you can buy 2 square meters of the building. With $100, you can own real estate and receive your rental income. So it then opens up the market to allow anybody who wants to own real estate to do that. And so this innovation has come through being able to have securities and a registry that is based on blockchain, which then removes issues of fraud and theft, and the register is kept in a way that is secure. And then we've got finally investment banks and stock brokerage firms. We facilitate capital raising. We do advisory on mergers and acquisitions, divestitures, restructuring of companies, facilitate trading activities, and so on. The lessons are many here. And the lesson is basically that collaboration is key. In our first very big IPO, initial public offer in Kenya, which was KenGen, We collaborated. We had transaction advisors coming together as partners to work together. The next largest one was the Safaricom IPO in 2008. And we opened it up and actually had the transaction advisory team composed of, I think it was JP Morgan, there was Dan Blair, there was Faida Investment Bank, and we came together to collaborate so that we can learn from one another. How do you do such a huge IPO? We'd never done it before. And so even as an industry, we have something called the Kenya Association of Stockbrokers and Investment Banks. Similar to the way you have an association for bankers, we have one for investment banks. And so together we're able to lobby government and to lobby for policy that can help the capital markets. Leveraging technology is going to be important. For us, if somebody wants to open an account right now, we have an app. They go online, open their account, they want to transfer money, they use digital money to transfer through M-Pesa. They want to withdraw, they can ask for M-Pesa or ask for an EFT. They never have to step into our offices. Branches are not something we discuss because you don't ever need to come to our offices. And so leveraging technology and having innovative products that are relevant to the people and the culture and the way of working is important. For example, Hannah talked about Equibs. I don't know whether I'm pronouncing it properly. Equib, where you come together and put money together. If that's what people are used to, then design a product for the Equib. How can they invest their money to grow it faster as opposed to just holding it in somebody's account or in their room and so on. And so investment banks are very important in that way. So ladies and gentlemen, my time is up. So thank you so much for listening. Thank you very much.